Hey guys, what's up? It's Chad. Hope you all had a great week. This week was really interesting. As you all know, the S&P 500 has been down for the last 9 days. That's a record over the last 36 years. Pretty impressive. There's a lot going on that's impacting the market, and I would be remiss if I did not mention the election. Of course, people are saying mainly that the market wants Hillary Clinton to win because there's more certainty uh, with her, because we basically know what her policies are going to be like, right? However, with Donald Trump, who knows? He has a lot of ideas on trade that are interesting to say the least. Whether they will impact growth or impact our economy and how they will impact it, a lot of apparently Nobel Prize winning economists say it will be horrible for the economy. Um, but we'll see if he would actually be able to get any of those policies in place if he was elected. But in any case, the market is acting like it wants Hillary Clinton to win. Um, so we'll see here on Tuesday. But for now, let's go around the horn and talk about what's going on in these markets. So top left-hand corner, you see the TLT. This is the bond ETF. And we were talking a lot last week about how this is really, let's see if I can do this here, going downward, right? So the lower lows. And I was actually looking for a retracement back up to this 50-day moving average, but we didn't even get that. We crossed right through the 200-day moving average and went down. So it looks like we might be getting a little bit of support here. You would think after this long run downwards, we should probably get a little bit of support, even back up to the 200-day moving average, something like that. That's probably pretty likely. And with the election looming, people, you would think, would be flocking towards bonds for safety. But in actuality, both bonds and equities have been falling. So what does that mean? That means that people are just taking their money out of the market. They're really going more into cash. And it looks like that's what we're seeing. So if you look at the dollar in your top right-hand corner, this is the dollar index. So this has been falling. So we hit a high back here a week and a half ago, thereabouts, close to 99 for the dollar index. And we've fallen back to 97. Pretty big move. So if you remember last year, the dollar made a big move up and it made equities fall pretty significantly. So if you look at this rise up here over the last month, it kind of does correlate with the fall in the S&P 500. Not over the last few days, over the last, 8 or 9 days, but over the last several months, it has been a correlation, and generally that's what you will see, an increase in the price of the dollar, a decrease in the price of the S&P. And that's interesting because there's all this talk about jobs came out this week pretty good, so people are talking about the Fed raising rates in December, and that's because they think that the economy is improving. So generally, if the economy improves, the dollar will increase. So very interesting. And then if you look here in the bottom left-hand corner, this is crude oil. So crude oil is really interesting, right? Because we popped back up over 50, and people were very bullish on oil for a while. But you can see that we've kind of made a little double top here, and actually, that's over the last several months. And actually, if you look just at the most recent high here, that's kind of a double top too. So a lot of resistance up there, and you see this pullback all the way back down to the 200-day. So we've hit the 200-day a few times, one here, and then again right now. So remove that. Okay, so this is a lot of selling pressure right here. So we'll see if the 200-day holds for crude oil here. With this double top, we may just pop through it and head back down to 40 or 35, which would be around this range on crude oil. So we'll see what happens with that too. Right now, what it looks like to me is that we may very well pop through there. Because of this strength, We might get a little resistance here, but at some point we might pop through there and move back downward and test maybe the 35 level. I don't know that we'll get all the way back down to 26 where we were back in February. That would be a little bit of a stretch, but it's definitely possible. Okay, so now let's look at the S&P 500. So in the bottom right-hand corner of your screen is the S&P 500, and you see kind of this turtleback look. It's kind of rolling over, right? So a lot of that, I think, is the uncertainty of the election, and whatever happens on the 8th will determine where we go starting on Wednesday morning. That's going to be a big deal. I mean, we could easily pop back up over the 50-day moving average, or it'd be very, very easy to get back down to around 2,000. If something happens, if anything untoward happens on Tuesday, I think we go at least to 2,000. So our Brexit lows are right here, 1991. So it'll probably be about that range. You know, there is a lot of support in the 2050 range, but I think there's more in the 2000 range. And on the upside, you know, the previous high, I have this red line right here, and the previous high before this turtle-backed area over the last several months was 2134, and so 2134 now, since we're below that, becomes resistance, right? So it took a while to pop through this, and really the support ended up being at 2020 or 2019 or 2018, right in that area, rather than the 2134s. 2120 is where the support was. A lot of people were saying that the support was at 2134 because that was the previous high. But if you look at it, that's really not what happened. So the real true support was at 2118, 2119. And you can see that we hit that several times. And then when we finally broke through that last week, that's when we started to see some significant selling, and it moved all the way down to this 200-day moving average on the S&P. So the question is just if we pop through that 200-day moving average and go down to 2050, which is very possible, but kind of doubtful because there was so much talk on Friday about 9 days of negative movement on the S&P 500 is such a big deal that a lot of people may buy into that and at least offer a little bit of support. But you know, that's technical trading, and technical trading does not always beat structural problems. So if this is truly a structural problem in the market, you may very well see it move down to the 2050 level, going into the election. If the polls come out on Tuesday during the day and they're portending something negative, you easily see it. The S&P move down to 2050. You know, down 30 points is not going to be too difficult. But if everything seems to move smoothly on Tuesday, you very well may get some technical buying here at the 200-day moving average. So technical buying probably move back up to the 2100 level or the 2115, 2118 level. That's what we're looking at. And we'll see what the futures show on Sunday afternoon too. So take a look at that as well. All right. Well, a lot going on. Very exciting times that we live in. So hopefully you guys have a great weekend and get out there and vote. And we'll see what happens next week. All right. Have a good one. Bye-bye.